Hi everyone, this is Sandeep Anand. Disruptions are inevitable in capitalism, but how to be ahead of the curve and capitalize on the opportunities? Here is a video I've done that explains how you can find trends early in life cycle and create immense wealth by doing so. So on your screen, there are three charts: top 10 stocks or companies in US in 2014, top 10 companies on US in 2021, top 10 companies or stocks in China in 2021, right? So you look at 2014, what are the companies that were there? Still, Apple was at the top, ExxonMobil, Google, Microsoft, Berkshire Hathaway, Johnson and Johnson, Wells Fargo, GE, Alibaba, and Walmart. Now look at 2021 list in US. Apple still at the hem, Microsoft, Alphabet, Google, Amazon, Facebook, Tesla, Berkshire Hathaway, Nvidia, Visa, and JP Morgan Chase. Interesting factors are Amazon was not even in top 10 in 2014, neither was Facebook, not Tesla, right? So Nvidia also wasn't there. And you see the shift. Look at the way things have transformed. The energy companies have gone out of the list. Many of the large banks have gone out of the list. Industrial companies like GE has moved out, and it is replaced by companies which are which are asset light, and it is more towards the digital world and electric vehicles. So you can clearly see the trends. This is how you catch the trends early in life cycle. You see electric vehicles start dominating, so they are still well early in life cycle. The penetration is even in single digit in many of the countries. You see e-commerce playing out pretty well in the last 2 decades, but it's still in the nascent stage. Just 15% of the retailers today, even in retail, is even in e-commerce and digital commerce. Digital and mobile ecosystems are still holding up. Apple and Microsoft and others. Cloud played out pretty well. That's for Amazon, Microsoft, all of them moved up the chain. And Berkshire Hathaway is still, still in the top 10. It's a different company altogether. But you see the trend changing, right? In China, top 10 companies are Tencent, Alibaba, Moutai is a consumer brand, ICBC, CM Bank, both are banks. Cattle is more of a battery energy storage, electric vehicle battery player. China Constructions Bank, Meituan Diaping, which is a digital ecosystem for logistics and transportation and delivery, and Agricultural Bank of China, Ping and Insurance, which is more of a digital ecosystem for finance world, Ping and Group. So you see that again, even China, it is moving pretty much in the same lines like US. Most of the companies that if you've taken a list tab of 2014 list, none of the digital players would have existed at that time. Probably Alibaba was there. So the trends are changing. Now, if you take a list of stock of 10 companies in 2030, it could look way too different from this. I mean, many of the companies would drop out from this. Maybe Shopify might top the list, or maybe new companies, new businesses, new innovations could come and top. You're already seeing an energy battery player like in China in top 10. So similar players could come in US as well, in Brazil, in Germany, many countries, all the countries will look very different 10 years from now, the type of companies. This is how you catch the trend. And now the advantage, the advantage of catching these trends are these trends always grow exponentially. So your risk, rather your rewards or returns is going to are usually in exponential range, which is very tough for human minds to comprehend in the way they're going to grow. And we have seen examples. I put in a couple of graphs here, which has played out a bit, like cloud computing, right? In 2010, it was in the initial stage, when 2007, 8 times. And from there, I put a chart, like look at the growth from 2012 all the way till now. It's an exponential growth in the revenue, right? I mean, nobody can predict how that year-on-year growth is going to become. It's a factor of multiples, and it's progressing geometrically. And same electric vehicles and autonomous vehicles. Look at Tesla's growth from last 7-8 years. It is another exponential growth that we see from 2012 to 2020-21. Same is the case you take in any of the top 10 in the current US or China list. You will see similar growth in many of the companies who have entered newly, because that's how they could become big. If Amazon was not even in the top 10 in 2014, if it had to come in the top 3, obviously the growth has to be stellar, exponential. And if you can find the next 10 years, what are those companies which are going to grow exponentially? You are ahead of the curve, right? Now, how to capitalize on this? And before I get there, there is one more slide I put here just to show you another interesting factor in terms of, the disruptions never is done by the incumbent. It's never the incumbent who will disrupt that field or that industry or that segment. What I mean by incumbent is the existing players who are dominant in that industry will never disrupt that industry. It's always a new player who will come from nowhere, which will go and disrupt that industry and become the leader. You see many examples I put here. Yeah, actually, Alicia, you could go through the slide. It's, Kodak from to for the camera was the field of camera photography was disrupted. Kodak went out of business. GameStop, physical gaming stores got disrupted by Roblox and Activision Blizzard and all of that. Then you see the office space, right? Motorola based communication phones who got disrupted by Zoom, and Apple replacing the smartphones, replacing the old traditional Nokia phones. The most important factor to note here is all of the incumbent were leaders in their own respective realms, and they were displaced by the new player. Burger King and the physical proprietary stores, food chains are being displaced, will soon be displaced by, or their mode of eating will be displaced by delivery players like DoorDash, Uber, and all that. And these are just US-based example. This is a global phenomenon. Whichever country you take, it is happening, right? Some of them are rapid, some of them are slow. Physical retailing got displaced, like JCPenney and all shutting down, and we saw bankruptcy in many of the physical retail stores, and displaced by physical digital commerce players. Started with Amazon, now Shopify. Social commerce is now another interesting factor. Maybe social commerce will soon displace the or the current digital commerce players, like e-commerce players like Amazon. Potentially Shopify could displace Amazon and topple that. So Wells Fargo, the traditional banking being displaced and by fintech players and private financial players. We've seen examples. Payments especially has been disrupted like anything. Like PayPal started the trend. Square, Stripe, Played. There are so many now, right? In China you have WeChat, Alipay, Adyen in Europe. It's all displacing many traditional banking operations. And now crypto could be another play that could displace many of these existing leaders. So we don't know how the world is going to exist in the future in terms of the potential blockchain players out there. Even combustion vehicles getting displaced, the rail engines getting displaced by autonomous trucks, electric vehicles, Neo Tesla displacing the business models. And the good thing is many of the existing incumbent players are rediscovering or restructuring their business, like Ford is getting big into the electric vehicles. So that's how the incumbent players get disrupted. If you notice, all of these are new players who have come from nowhere and disrupted the industry. We can see Upstart now, many new players entering in that arena, Zoom. So that's, and you couple of other examples I missed in the previous slide. Vanguard. So there are some players who will come and disrupt the whole industry itself, not displace the players, but transform the whole industry. We saw Vanguard's ETF, the passive investing concept, disrupting the whole hedge fund and mutual fund industry. Now it's so much prevalent, so depth. So many retail investors are utilizing the ETFs and passive investing. They transformed. And even Robinhood completely disrupted the entire brokerage industry with zero commission and all that in the equity markets world. And potential future disruptions that I can think of are like, potentially bond markets could become non-existent. It's already non-existent. I would say bond markets are in a negative zone almost in most of the developed nations. Now, developing nations are following the trend. Potentially bond market way of funding could get displaced. That whole industry could become void. And equity markets could become mainstream with, in the sense, equity market could become a parallel stream with crypto markets. Stock exchanges could coexist with crypto exchanges in the future, because I think crypto exchanges could, crypto based companies rather, could become a major source of funding, just like equity funding. In addition to the, if you see, you have IPOs today in stock exchanges, but you could potentially have companies listing in crypto exchanges, many of the transactions could be crypto world. So many of the new players can emerge from there and disrupt the equity markets itself, the stock exchanges itself. So it's a wait and watch game. So how to look at how to be ahead of the curve or ahead of all these innovations and benefit from exponential wealth creation. So look, you don't need to get all of these right. Even if you get one trend like this, it can change one's life. Whether if you're starting a business in that area, where whatever, it can change one's life. How to be ahead of the curve? First point, be a keen observer of trends. I've shown you the charts. If you are a voracious reader, widespread reading helps to understand different fields, different, if you have interest towards that. And it helps if you are early in a trend, it really helps. It can transform one's life. Have a foot at the door. Now, if you see certain trends coming up, it's not that you have to go all out and before the trend plays out, because some trends can fizzle out. So before that, take a vested interest. The reason is, if you have a skin in the game, if you have a vested interest, and if you have foot at the door, it'll help you track the trend. Because you have a vested interest, you will closely track how things are shaping up in that trend. And if the trend plays out and being early, that is ahead of the exponential curve, it can create huge wealth. If you are ahead of or even in between that exponential curve, even if you figure it out in between, you don't have to be early. People have made money even investing in Amazon in 2014. We have seen that in the chart. So even if you figured out the trend a little later, before it plays out completely, because it's exponential, even if you get into that game or groove somewhere in between, you will still get huge benefits out of that. And not only for investors, even for choosing your college degree, I did another video on that, or for your career options, planning your startup or a business, with all playing out in, it's helpful to understand the trends early in life cycle and being ahead of the curve, right? So I wanted to bring this presentation, and thanks for staying with me. See you again. Signing off, Sandeep, Anand.